Good morning, ladies and gentlemen, and welcome to the show. Listen, I'm glad to have you guys here on this Tuesday, the 25th of August, 2020. And, I don't often report on hurricanes on this channel or the Delta Report, only if we're going to really have a bad one. And I can see it in a few days in advance. It's going to be a really bad one. And, well, let's get started. Let's open up the charts right here and take a look at this. Now, what we're looking at is, I want to focus the chart in here. This is a hurricane that's developing right here. It's just off the east side of the coast of the west side of the coast of Cuba. It's just off the Florida panhandle area, and it's out in the Gulf of Mexico. You see that black-looking stuff? The orange isn't so bad, but when you get that black-looking stuff, what that is that's called convection. And that's thunderstorms that are popping up in the afternoon. You ever seen these big thunderstorms down in the south? They're called, and they form like into an anvil, and they shoot way up into the sky, the thunderstorms. Well, you can see one little one popping up right here in the southwestern quadrant, and these are feeding into the storm, and this is called convection. Whenever you see it on the radar like this, really black looking like that, that means the storm is rapidly intensifying. And it's in the Gulf of Mexico right now, and it's feeding, and there's an awful lot to feed on in the Gulf of Mexico. Very warm waters, this time of year in the Gulf of Mexico. So I'm reporting on this storm because I think this is going to be a bad one. Let's take another look at this and the track and the trajectory of it and its current location. It's only a 75-mile-an-hour hurricane right now, which is just borderline hurricane. But boy, gosh, this thing is going to intensify. And it's moving west-northwest at 16 miles an hour. And you know where it's heading? It's heading right for the borderline between Texas and Louisiana. So if you guys live on that border between Texas and Louisiana, this could be a really bad storm when it gets up there. They're forecasting at the National Hurricane Center 110 miles an hour. But when I see that black-looking convection like that, really feeding the storm, big time, you could get rapid intensification. And you've got 3 more days out over open water where the storm can rapidly intensify, 3 full days over open water. My opinion is, I think this thing could actually make it what's called a major hurricane, which means a Category 3. I'm thinking myself that this thing could actually get up to that with 3 days of rapid intensification over open water. So, Category 3 hurricanes are nothing to fool around with. I think there's a hurricane called, some of the major hurricanes in history that we remember that are pressed in our memory, like Andrew and a number of them were made what's called major hurricanes once they make Category 3. So, we're looking at around Wednesday it being ready to make landfall, Wednesday and into Thursday. We're going to keep our eye on this one right here. But you guys living in the coast area right there, it might not be a bad idea, especially if you're living down near the coast between Louisiana and Texas. It might not be a bad idea to go out to the Home Depot and buy yourself a couple sheets of plywood to cover your windows and stuff like that, and get some emergency supplies, maybe get some candles, some batteries for your flashlight, a few jugs of bottled water, things like that. Okay, let's move on. Silver price today, $26.45. It's down 13 cents on the day so far. And it's basically kind of going along sideways. The Federal Reserve right now, is in total control over what happens in these markets and everything. If they were to completely pull stimulus away from the system, the markets don't really have a bottom down there where, everything has a price point. And if your price point's not being met, in other words, if you don't have buyers, nobody to bid on whatever you're selling, then the price will drop until it goes down to a price point where it'll find bidders. Well, the stock market right now, I'm going to tell you, before they would actually find bidders, they would be the stock market would go down substantially lower than 10,000. That's if the Fed just were to withdraw all support from the economy. That it would go down to what it's really worth. It's what's called finding fair market value. And so the stock market, the fair market value on it right now would be so much considerably lower. See, you got all these buyers out there right now into the stock market. When you see the stage come, and where we're at right now, where you've got actually kids trading stocks, the same thing happened in 1929. Everybody was involved in the stock market. And right now we got the same situation. We got all these passive investors. And the passive investors actually have this belief system that the stock market, wherever it is, it doesn't matter what the valuations are, it doesn't matter what's going on, wherever the stock market is at that particular time, they believe that that's where it should be. So if they enter the stock market, a passive investor right now, to buy, they believe the stock market is priced correctly. They're basing everything on that assumption immediately. So when you get that sort of investor, and when they start to make up more than 50% of the stock market, they're not interested in things like valuations and earnings. They're not interested in any of that. They believe, they go by the assumption right off the get-go that the stock market is exactly where it's supposed to be at this particular moment in time. That's a passive investor. It's getting so, you've got everybody involved in the stock market, and it's been pumped up way too high, and how could this affect your gold and your silver and your cryptocurrencies? Well, a stock market crash is extremely deflationary, and the initial part of it is probably going to be a negative effect for gold, silver, and cryptocurrencies. But as it progresses, in other words, a stock market crash a lot of times is not something that just lasts one day. It progresses in. As it gets deeper and the stock market goes down lower, then things change. And then investors start to look for safe haven assets like gold, silver, and crypto. So what you could initially see is the price go down on gold, silver, and crypto. But it's very likely as the crisis deepens that they're going to start to run to gold, silver, and crypto as a safe haven against what's happening. And then especially when you hit the turning point where the Fed finally relents. Because let's face it, guys, the Fed's not going to let this thing completely fall. What we're actually looking at here is a game of chicken. Fed's sitting back on one side, and they're watching the stock market fall. And they're saying to themselves, well, it'll bottom out. It'll bottom out. Just give it a bit more time. We won't need new stimulus. It'll bottom out. And the stock market will keep going down lower. And then they'll say, well, it's going to bottom out soon. They're keeping waiting for it to bottom out. And they say, well, what we'll do is, they all sit around the table in the Fed, and they talk to each other. And they say, what we'll do is, we'll go in, and we'll do some jawboning and get the market to go back up. Instead of doing real stimulus, we'll just make it seem like we're going to do stimulus. You get out there, Jerome Powell, and you stand in front of everybody, and you tell them that we're going to be very accommodative. So he gets out there in front of the mic, and he tells the world, we're going to be very accommodative in the middle of the crash, right? And sure enough, the stock market quits going down and starts to go back up a little bit again. But after a couple of days, they know that that's just a head fake because the Fed didn't really do anything. So then they're back to this game of chicken again, with the stock market continuing to fall. This is what I see coming. And the Fed's going to try to hold out as long as they can. But, the deeper the stock market fall goes, while the Fed's trying to hold out, trying to get a bottom, and like I told you guys, there is no bottom until we get down below 10,000. There's going to be a certain point where the Fed's going to relent and say, hey, you know what? See, it's the same thing happened. This is just a repeat. The exact same thing happened a few months ago. Stock market fell all the way down to 18,000. before the Fed finally reacted, and they all this stimulus that's buoyed the markets up to what it is. Same thing's happening over and over again. It's going to happen again. And then the Fed's going to relent. But this time it's going to take more stimulus to get the market to go back up again. They can't let things crash ultimately in the long run. And these surges of stimulus is going to more and more affect and start to make people realize, hey, this game is not going to end, and it's going to end badly when it does end. It's going to end in inflation, possibly even hyperinflation. When that realization starts to hit everybody out there, they're going to start dumping dollars, and there's only one place to go as a safe haven, And this is what's coming in our future. But we're going to have to play through these games, like in this game of chicken between the Fed and the stock market. They don't want to put money out there. They're stingy. But they will if they have to. It's the same thing Mario Draghi said years ago when he said whatever it takes, Okay. 26.37 for the silver price today. And it looks like it's just suffering to maintain these rally prices that we had a few weeks ago. It's slowly working toward the downside. It's being bearish. Right now it's being bearish. Gold, silver, and crypto's being a little bit bearish. Let's take a look at gold today. 19.15, working its way down a little bit, It's down $13.40. Crypto's swung bearish now too. You remember yesterday I was on the show and I said the Bitcoin dominance was 59%? Well, the Bitcoin dominance is rising again. It's 59.2%. And what does that mean? It means just a little bit of a bearish shift to the market in the cryptocurrencies today. And we see the action. We see it's a little bit on the bearish side. And Bitcoin's starting to suffer to maintain a price over $11,000. $11,449. So it's a little bit bearish, down 2.64% on the day. Dow Jones Industrial Average. It's off 135 points on the day. Guys, I'm predicting this crash in the Dow. I'm watching this very carefully, this 135-point drop, that it might not be the start of something much bigger. We don't need a reason at this point for the stock market to go into a crash. Just the selling alone could start to get nervous. We can start to get nervous investors, and it could push more selling. And we don't really need a reason at this point. The reason's already there for a stock market crash. In fact, considering what's going on in the Main Street economy, the only thing supporting these markets is Federal Reserve stimulation. And so there is no floor right now. This is just being buoyed, very much like that illustration I showed you guys yesterday with the water droplet. That energy that pushes that droplet back up a little bit. All of a sudden it stops. It comes to an apex point, then it stops, and then it starts to move in the other direction. And this could be the apex point, or it might be a few weeks out. But we're going to hit that apex point with the stock market, and down she's going to come. In other words, gravity's going to take hold. Let's take a look now at crude oil. 43.10. It's up 48 cents on the day so far, or 1.13%. U.S. Treasuries. We're seeing rising yields all the way across the board, and today we're seeing substantially rising yields. 7.5 basis points. 7 basis points on the 30-year. Now that's substantial. 1.41 on the 30-year. A 6.4 basis point rise in yield on the 10-year up to 0.71. Oh, the Fed must be just loving that. They like that about as much as they like to see the stock market fall. When they see these yields rising like this, this scares them. This scares them even more than the stock market. You guys want to know. This really scares the Fed when they see these yields rising substantially like that on the long end of the yield curve. They're not going to let that continue. They will have to do yield curve control. And they don't want to do yield curve control. Right now, they're in a moment where the Fed doesn't want to do any more stimulus, big stimulus, and they don't want to have to do all this stuff. But they're going to be pushed into it pretty soon. There's no way out. They're going to have to keep doing more and more. Once you start going into some these programs like quantitative easing, you're letting the genie out of the bottle. There's no way to ever stop them. And they're going to have to increase more and more and more to support the economy. There's no end to it. And in the end, it does. In the end, it leaves you to a certain point. This is where it leads you. Once you get into this trap and you start to control the economies yourself, like with an entity like the Fed, it ultimately leads you to a point where you're standing there and you either let it all deflate into and let it all crack up and let it all leverage out. And of course, everything would just go down flat. It would flatten everything. Everything would go bankrupt. The whole system would go bankrupt. The treasuries would go bankrupt. Everything would go bankrupt. You either let that happen and take your medicine, and it would be worse than medicine because basically the whole system now, they've got it so over leveraged, everything would just stop. Or you continue on with what you're doing and you keep pumping more money in and keep kicking that can down the road. But it takes ever increasing amounts. It never ends. Just bigger, bigger, bigger until it hyperinflates the dollar. So there's where we are. They got their choice, and they're not gonna jump over the precipice into deflation and let everything come to a full stop. They can't ever do that. Because it would mean the end of their control, too. It would mean the end of... now, at this point, the way they got everything leveraged, it would just basically freeze. Everything would just freeze, and there would be no opening it back up. Everything runs on money. Everything would go bankrupt. The whole world would go bankrupt. All the farms would stop. All the telecommunications companies would stop. All of the if they let it go off into deflation, and the only other route from that is to keep pumping the money out there in ever increasing amounts until the money's totally worthless, until the money is worth zero. But that'll take a bit longer to get to that point where the money's worth zero. And guess what? I hate to tell you guys this, but ultimately, when the money is worth zero, a wealth transfer occurs over into hard money. And that causes almost as much chaos as letting the whole thing stop. So, but it takes longer. It takes longer to get there. They can kick the can down the road for X period of time. I figure if they're really careful, they might be able to do it for up to even 5 more years before the dollar's worth totally zero. I mean, you're going to see it down. It's going to be worth 90% of what it is right now. And then it's going to be worth 80%, 70, 60, 50, 40, 30, 20, and when it gets down to that last 10%, it's going to even go faster. And in the end, it'll be worth 1% of what it is now. And your savings, your retirement funds and everything else, when the dollar's only worth 1% of what it is right now, that means that you've taken a 99% haircut through inflation. But that's the road they have to take. There's no other alternative other than to let it all just deflate. And if they did that, like I say, everything would just stop right now. They never want to do anything like that right now. They always want to make it next year or the year after. And the reason why they do that is they think to themselves, well, in 1 more year, I'll get retirement and I'll be off and there'll be some other bozo in my place that'll be the leader or whatever, or the president or the vice president or whatever they part of the system that they are. They think, well, if I can just get out of office and get my big fat retirement, I'll let him take care of it, And they always keep pushing it off and trying to make everybody happy within their constituencies, But the thing about it is in order to make everybody happy, they have to keep the system going. They have to keep pumping more and more money in. And ultimately, in the end, the hyperinflation will go faster and faster toward the end game of this because this is all exponential. The end game ultimately is the fiat currencies, all of them, being worth zero. Absolute zero. And the wealth transfer will mean that all of the world's value of everything, the houses, the cars, everything, won't be priced in dollars anymore. Won't be priced in yen anymore. Won't be priced in British pounds anymore. It'll be priced in gold, silver, and possibly cryptos. But that wealth transfer is going to create just as much trouble because it's going to happen fast, I think. That's what's pointing toward. When the wealth transfer finally really gets going, everybody is going to want to get out. We've never seen a situation like this before. But everything's pointing toward this actually happening, this wealth transfer. And if they keep going the way that they're going right now, it might take a little longer to get there, to that wealth transfer. It might take a while to get there to it. I mean, it could be as much as 5 years from now, if depending, but it's probably not going to be. It's probably going to be more like in about a 2-year scale, this wealth transfer. And if you're on the right side of that wealth transfer, well, an awful lot of people that are rich now are going to be made poor because the wealth is going to transfer right out from under them. In other words, what their money, they might just leave it in the bank. They might have millions. Your neighbor sitting next to your house next door, he might have millions in the bank. And right now you might be suffering, but you've just went out and bought one tube of silver coins. It didn't cost you that much. And, you're able to get it and you feel yourself lucky. And, your neighbor, he might have nothing in the end. And that one tube, just that one tube, when the gold to silver ratio goes back, to like maybe, it might go back like 20 to 1. It wouldn't surprise me a bit. Just that one tube of silver. And the price gold's going to go to during this wealth transfer. Just that one tube of silver might be your retirement. Might be enough for a complete retirement. Where he was counting on this big retirement he was going to have, your neighbor, where he was going to be riding around in a BMW, with his wind blowing his hair back, and he was going to have his house down in Florida someplace on the golf course, and he was going to do this and going to do that, and now he's 100% broke because the dollar went down to zero. And you still got that tube of maples or tube of eagles. Those are the two most popular silver coins anyway. Maples and eagles. If you guys are new to silver, that's what to buy. Forget all these other stuff, all these all this stuff like maples and eagles is where to be. That's where to be, And make sure they're not Chinese knockoffs. Because the Chinese, by gosh, they're awful good at making knockoffs of these silver coins. They look almost identical, so be careful where you buy them. Make sure you're getting the real thing, that's solid silver through and through, and it's not some silver plating over top of some sort of brass coin that the Chinese knocked off. If you look at it, the fine details of the coin itself, if you know what you're looking for. And there's also tests you can do to make sure it's real. Anyway, listen, thank you guys for listening to my show. I know I rambled on a little bit long this morning, but we'll catch you guys tomorrow, and you guys have a great afternoon. Bye-bye.